Hello everybody and welcome. Thank you Daniel for that introduction. My name is Fleur and I am also a consultant with Team Chester, and today I'll be inviting you to invest in the future, invest with Baldwin. Baldwin's company strategy was to focus on being a cost leader with product lifestyle focus. By concentrating on this strategy, the intention was to have multiple product lines and targeted segments, generally concentrating high, traditional and low segments with minimum focus on others. Their aim was to spend significant money on high promotional and sales investments and high research and development costs to assist them in providing a great return on investment. Baldwin strongly believed that investing money in recruitment and training of its employees will enable them to keep and attract talented and dedicated employees. Baldwin's strategy enables them to concentrate on what matters, which is to keep costs to a minimum to allow maximum return to stakeholders and shareholders. Baldwin do this by keeping research and development and production and material costs to a minimum while still being competitive in the marketplace. Baldwin have a passion for offering excellent value for money by producing products at the lowest possible price while staying true to their core values of open and fair competition. Baldwin invites you to invest your money, invest in the future, invest with Baldwin. Company mistakes. At Baldwin, they constantly strive for excellence and value for money, and they are not afraid of change. They also realise that nobody is perfect, and where they make mistakes or could have done something better, are happy to learn and grow from this. To use a quote from the famous Sir Richard Branson, he says, "You don't learn to walk by following rules, you learn by doing and by falling over." We believe this sums up Baldwin's way of thinking and how they operate. At Baldwin, they admit that they have made mistakes in the past and acknowledge that they experienced a problem with sales and production forecasting in the year 2022. They had a problem by underestimating their sales forecasting, which resulted in a bloated inventory. An example of this was in the year 2022, where the stock levels held for the product Bumble were 833 days, Buddy's stock levels of 706 days, and Baker of 547 days. This resulted in a significant amount of stock on hold which had not been sold. The result of this is high inventory carrying costs, which just means that Baldwin was struggling at that time to sell its product. However, by the end of year 2023, Baldwin had cleared its bloated stock significantly for its products Bumble, Buddy and Baker, all down to 0 days, which is exceptional work. Yes, they fell over. Yes, they made mistakes, but they learnt considerable lessons along the way by putting more time and effort into their sales and production forecasting and recovered well from their mistakes. Ethical considerations. At Baldwin, they believe that the most fundamental and essential ethical issues that businesses face are integrity and trust. At Baldwin, they are committed to providing employees with the best possible working environment. They recognise that their employees are the key to their success and are committed to providing their staff with the best possible workplace and rewarding their staff with excellent wages and entitlements. However, during the course of labour negotiations, Baldwin experienced a slight problem during the financial year 2022. The problem arose between the starting position for increased wages and the ceiling negotiation position of wages. This resulted in their employees striking for 5 days, which resulted in no stock being produced by the company for this period of time. Whilst it is not good business practice for employees to protest over a wage dispute, as the strike was only for a short period of time and resolved, Baldwin did not consider that this strike will have a material impact on company profits or the company image or profile, and for this reason, Baldwin did not consider it material to disclose it to shareholders of the company. I'll now pass you on to my colleague who will provide you with further information on why you should invest in Baldwin. Thank you, everybody.
Thank you, Olivia. I expect that most of you will be feeling pretty excited about the future growth prospects of Baldwin. I am now going to provide you with a broad overview on the financial value of the company. In order to encapsulate the figures analysed over the past 8 years of financial statements, I have narrowed the valuation criteria to 4 key measurements: the current ratio, the market to book ratio, enterprise value and cash earnings. A firm's financial health can be measured using the current ratio, which assesses liquidity and determines whether the firm has sufficient working capital to meet short-term needs. As you can see, Baldwin's current ratio has maintained a reasonably consistent progression over the past 8 years, with only a couple of drops when their forecasting was off the mark in 2020 and 2022. But as previously mentioned, Baldwin has been quick to learn from their mistakes. This is indicated by their last 2 years of trading, whereby their ratio has progressively increased, which implies a reduced risk of the firm experiencing a cash shortfall in the short-term forecast for the company. The market-to-book ratio compares the firm's market capitalisation to the book value of its shareholders' equity. Most successful firms have a market-to-book ratio which substantially exceeds the value of 1. A ratio greater than 1 indicates that the value of the firm's assets when put to use exceeds their historical costs. Furthermore, this ratio is a good indication of the value added by Baldwin's management, as it reflects the market's perception of how they view management decisions for the company. As you can see, the first 4 years for Baldwin delivered consistent value. However, some poor sales and production forecasts led to a few years of depleted investor confidence. Despite this, Baldwin have recovered from this period and managed to significantly increase the profitability of their firm, restoring investor confidence. Firms with higher market-to-book ratios are often classified by analysts as growth stocks, so now is the time to invest in Baldwin. The enterprise value illustrates the value of the firm's underlying business, which is shown in conjunction with the firm's cash earnings. As can be seen from these graphs, Baldwin's enterprise value and earnings before interest, taxes, depreciation and amortization values have experienced significant growth over the past 8 years. In comparison to other firms in the electronic sensor industry, it is easy to see that Baldwin has achieved outstanding growth and significantly increased their market value in recent years. The company took longer than other firms to take off because Baldwin's management were more conservative with their reliance on debt as a source of financing in the early years. This was an intelligent decision, as it allowed Baldwin to plan effectively and solidify their strategy. This corporate practice to build better strategies was acknowledged by Macraticus, observing that accurate forecasting in business is not possible, and managers should channel their efforts into being prepared for different contingencies. Since Baldwin is now in the midst of a growth phase, there is potential for the company to be part of a merger or acquisition with another firm in the electronic sensor industry. If the opportunity presented itself to Baldwin, the shareholders are in a position to benefit because the combined business between two companies will allow firms to achieve efficiencies, diversify risk, and create greater value than if they operated separately. However, it is important to bear in mind Section 50 of the Competition and Consumer Act 2010, which prohibits mergers that may substantially lessen competition in the market. Overall, the growth trends displayed by Baldwin in recent years have seen increased profitability and restored market confidence, which indicate the company is a good investment for long-term investors. To date, Baldwin have overcome diversity and challenging conditions to meet industry demands and successfully transitioned to a niche market. This is testament to the organisational culture, passion and commitment of the entire team at Baldwin. The company has achieved outstanding growth and significantly increased their market value in recent years. Their performance will only grow stronger due to the level of management experience in the company and their mission to engage markets with the highest demand. Their company strategy enables the firm to provide maximum return to their stakeholders, including shareholders over the long term. Invest in the future. Invest in Baldwin. Thank you everyone for listening to our presentation today. We hope that you enjoyed it. We now welcome any questions that you may have. Thank you.